How's everybody doing? Keep the energy up. All right, well, this untitled fireside chat. Again, Pete Rizzo, Bitcoin historian on X, host of the Supply Shock podcast. Happy to be joined by someone who is making history in the present, Robert Mitchnick, head of digital asset at BlackRock. So I want to start off with IBIT. Obviously, one of the biggest success stories in all of finance this year in the top 5 in inflows, but the fastest ETF to $50 billion. So maybe we can start off. How does IBIT become more successful? Bitcoin ETF already taken Wall Street by storm. It's already breaking records. Where do we go from here?
Yeah, well, thanks, Pete, and it's great to be here, to be back at the conference. And obviously, it's been a historic run for IBIT and really for the whole Bitcoin ETF category in the first 16 months of life, really. Unprecedented in terms of the level of demand and adoption that we've seen. But I think it's important to still remind ourselves that it's very early in the life cycle of an ETF. In many instances, it takes multiple years to truly kind of get all the cylinders firing in terms of the journey that you have to go on from an education perspective, from an institutional diligence perspective, from all the big wealth advisory platforms who each have their very intensive, typically multi-year processes where they vet these new products. First to just allow their advisors, their tens of thousands of advisors, to add them to client portfolios, but then the whole other step up from that, which is to actually consider putting these in model portfolios, right? And so 16 months in, we're actually still pretty early.
Amazing. Well, I think one way that you've publicly talked about moving IBIT further, or Bitcoin ETFs, is expanding geographically. I know you've hinted at Europe. There's some underway in the UK or maybe Europe. Can you talk a little bit about, is that coming? When can people expect that?
Yeah, so we did just recently launch a European Bitcoin product to follow on, obviously, from the success that IBIT has had in the US. And the European market is smaller for Bitcoin ETFs for sure than is the US market. But we've seen, I would say, fairly substantial growth in interest there. Very big difference, the types of conversations we were having 18, 24 months ago versus today. So that's off to a strong start. And we're excited. This has been really a global story. Even if you look at IBIT's numbers, a massive amount of that actually from various offshore wealth channels, including some of the big markets in Asia who have access to US markets. Obviously, the majority of it is still US based, but really this is a global story, and so we're excited to be able to make this available as broadly as possible to our investor base.
I guess at maturity with something like IBIT, how many countries would we expect an ETF like that to trade in? What does kind of a total adoption look like for a product like that?
Well, it depends on the country, right? So there are a number of countries, including many in Latin America, who allow cross-listing of U.S. ETFs. So actually, a number of the largest markets in Latin America now, you see IBIT cross-listed there. In Europe, it's different. Europe has its own ETF market, its own listing process, and so when you want to be able to provide an exposure vehicle, as we did to Bitcoin in Europe, you do it through a standalone product that's domiciled and listed there, and so that's what we did. Asia, a lot of those investors actually just have access to U.S. markets, but not in all countries, so we're looking at ways to make it even more accessible to more investors there as well.
So you mentioned model portfolios. It came out, I think it was last year, BlackRock put out a report essentially recommending a certain model portfolio with 1% to 2% Bitcoin allocation. This sort of made shockwaves around the industry. It was seen as a big validation. What has happened since that recommendation? Is that recommendation being followed? What types of investors are looking at it? How do we go from that recommendation to investors actually allocating 1% to 2%?
Yeah, so just I think to set the stage for what model portfolios are and how they work for some in the audience. Basically, the idea is to support financial advisors in their journey to be able to build better portfolios, more optimized portfolios for their end clients. And so model portfolios have become a very powerful tool to help financial advisors do that. At BlackRock, we have a very significant asset base in the model portfolios that we build and then equip our wealth advisor clients with. And one of those portfolios, as you note, in February of this year, so just about 3 months ago now, added Bitcoin as an allocation in the 1% to 2% range. And this was a model portfolio that includes alternatives in it. And so that was, as you note, I think a significant development. That was not a sudden reaction to any one thing. That was a result of multiple years of analysis and research by that team who runs those portfolios. So it's been an exciting milestone. I think the investment thesis that is behind that is similar to what folks have heard me talk about a lot, what folks hear Larry talk about at various points, and that is this view of Bitcoin as an emerging global monetary alternative that is attractive in potentially a lot of states of the world.
So for the model portfolios, this is a way to reach a different type of investor. Can you talk a little bit about how the profile is different? Because some of these clients might not even be investing in these portfolios for Bitcoin, right? It just comes along with the package.
That's right. So that can happen that way through a model portfolio. It can happen where, so what we've seen is at the outset of the ETF launches, most of the brokerage and wealth platforms in the US made these products available in what was called execution only, which meant that the end client had to say, I want that, please put that in my portfolio. You make the decisions on the other 97% of my assets, but I want to have a Bitcoin ETF for, whatever position size. But the advisor could not recommend it. Now what's happening is more and more wealth advisory firms are on that journey to approve this, to give their advisors the discretion to allocate as they will. So that's kind of another channel through which this adoption is happening. And then the models is sort of the highest level where it becomes platform-wide, where basically, for a given wealth advisory firm, the model that a majority of advisors are running their portfolio off of, that actually may include an allocation to these.
I want to talk, a lot of people obviously want exposure to Bitcoin, a lot of investors on Wall Street now seeking that. The big narrative in the news has been this idea that Bitcoin is correlated to the stock market, right? We've kind of seen this over the last year, breaking correlation, the decoupling. What is your view on whether Bitcoin has decoupled from equities? Has it decoupled from equities? Or are we still waiting for that to happen?
Well, through most of Bitcoin's history, it's had very low correlation, right? And that is, I think, much more consistent with its fundamentals as this global, scarce, non-sovereign, decentralized asset that's detached from any one country's political risk, economic risk, monetary risk. It's only kind of lately that people have started to promote this idea that it's a generic risk-on asset, whatever that even means. I think people would have a hard time,
right,
defining that. But that narrative is sort of new, and it doesn't come from any particularly fundamental place. But if you repeat something often enough, it can become a little bit self-fulfilling, especially in the short term. So we have seen episodes where that's happened, right? I think when you consider the layer that exists in the Bitcoin market, I think you could almost look at it, there's two layers in this market, right? You've got a top layer that is more short-term speculative, often trades with leverage, a little bit more retail skewed, trades with pretty high frequency, and there some of the trading patterns look more like tech equities, right? Equity
this
markets,
is like the Mag 7. We've heard a lot of talk about that correlation.
Exactly. Equity markets are going down because of some negative thing that's happening. That negative thing may have no impact on Bitcoin. It may actually be a positive for Bitcoin fundamentally, but just impulsively, it's like sell everything in that top layer, right? And the leverage makes that effect worse, right? Then you have the second layer, which is actually a much larger share of Bitcoin, which is, I think, much more long-term focused, fundamental, typically not with leverage, doesn't trade that frequently. And most of the investors in that layer, including the institutional players who are entering the space, they don't view Bitcoin as a, quote, risk-on asset. They view Bitcoin more so as a differentiator in a portfolio and a potential hedge against some of the left tail risks that exist elsewhere in a traditional asset portfolio. And so when these events happen, and I think a great encapsulation of this, think back to August 5th. The market had a mini meltdown, and Bitcoin got clobbered that day, right? Was related to Japanese yen, carry trade, unwind, had nothing to do with Bitcoin fundamentally, but Bitcoin got smacked. And that was unfortunate for investors who sold off into that just because equities were going down, because Bitcoin doubled over the next 4 months, right? And fundamentally, what tends to happen when you have these short-term moves is that lower layer is accumulating, but they don't accumulate on the day of. It's more of a medium-term story where they see a dip that may be irrational, and they're buying, and then you see these bounce backs. And we've actually seen that time and again through Bitcoin's history when there's these major sort of disruptive events.
Well, we'll have Peter Schiff here tomorrow. He'll be making the case for gold against Bitcoin. That'll be on the main stage. Interesting to see. Can we talk about this narrative of gold versus Bitcoin? Because it does seem like gold has had a great year, right? And investors have been paying attention. And Bitcoin is portrayed as a digital gold. So maybe moving from this equity conversation to gold, what are you looking for when you're looking at Bitcoin versus gold? How do you think through that market?
Well, personally, I don't think one needs to look at the competition as zero-sum, right? They are, in many ways, sort of different angles on a similar theme, a similar investment thesis and worldview, right? They both are global, scarce, decentralized, fixed supply assets, right? They're both detached from those traditional country and systemic risks, and that's why investors are drawn to them. And gold today is much less volatile and has a much longer history. But Bitcoin is digitally native in an increasingly digital world, is efficient to store, can be transferred anywhere in the world in near real time at near zero cost. So it has some significant advantages too. I think there's no question Bitcoin has much higher upside than gold and lower downside, right? And so there's different flavors of it that investors have, and many investors are going to own both. We see lots of investors adding to both. We see some switching from, maybe they were 100-0 gold Bitcoin and they went to 80-20 or they went to 50-50. We see a lot of that. But certainly as a category, as a sort of diversifier and hedge, Bitcoin and gold is growing.
But it seems like the narrative that maybe we want, or the industry wants, is this idea that Bitcoin is a hedge. And I guess how do we get there through this market volatility of these different narratives, in your view?
Well, it's amazing to me that the industry hasn't promoted this more effectively, because it has a much stronger fundamental case than does the opposite, that it's just a risk-on asset. Bitcoin is obviously a risky asset. It's volatile, it's relatively new technology, but it's a very different set of risk and return drivers from traditional equities and most of the rest of what's in any one person's portfolio. And so the fundamental story is not hard to tell, and yet you still see, I still see crypto research, even though the idea that tariffs are somehow relevant or negative for Bitcoin has, I think, been pretty thoroughly debunked, right? Bitcoin's up 12% in April, had a great month.
Best performing asset since the tariffs.
Bitcoin's never heard of tariffs, doesn't know what they are. And so, but you still have crypto research outlets saying, we'll see if the tariff headwinds have eased, like cautious on prices from here. I don't understand why they're writing about that, but for some reason, well, I think the reason, Pete, probably is if you are in the business of promoting trading volume, it helps to be able to point to a given day's news event over there in the traditional market, the traditional economy, to drive some motivation to trade, right? The reality is, if we're just thinking about fundamentals for Bitcoin, there's probably only 3 or 4 things that happen in a whole year that really matter for its long-term fundamental value. That's hard to write about every day.
This is a Bitcoin conference, but obviously the environment at Wall Street is looking at the asset class beyond Bitcoin. I'm sure you're getting pressure from some folks to expand the product set beyond Bitcoin and Ethereum currently. How do you think through that, and what do you see coming down the pipeline? Are we at the verge of a kind of an explosion in these ETFs, these crypto ETFs?
Well, I think, when we think about this space, there's obviously lots of other things happening in the crypto world that are interesting, exciting technological developments. It's just different, right? Like Bitcoin is in a category of one, and then the rest of crypto is competing in different lanes, right? Attacking different use cases. The idea of, which one is the emerging global monetary alternative within crypto, that question is done and resolved, right? And so what that gives rise to is very different kind of investment theses and investor market dynamics between Bitcoin and everything else. So I actually think longer term, you're going to see the correlation between Bitcoin and the rest of crypto fall. When we think about the rest of crypto, actually, that does look a lot more like kind of a tech equities venture style exposure versus Bitcoin, as this diversifier and potential hedge. That's a very different way that investors will think about it in the portfolio. And as a result, we're seeing a very different kind of engagement across our client base in terms of the way the Bitcoin story is resonating that doesn't quite get replicated in these other ones.
We've got time for one final question here. A lot of politicians on the stage. We'll have J.D. Vance becoming the first vice president to take the stage tomorrow to talk about the future of regulation in the United States. What are you looking for when you're watching the political environment in the U.S.? What do you see as the likely scenario for the next year or two?
Well, I think, whatever happens at a specific level from a legislative process, it's just a great encouraging thing that there is such momentum behind developing the regulatory framework for this space to harness this technology, to make it accessible, to make the U.S. a leader and an innovator in this space. And so whether we're talking about stable coins or we're talking about market structure, I think there's great momentum there, and we're excited to see how that shakes out.
Robert Mitchnick, thank you for joining us. We'll be right back with more programming. Stay with us, everyone.